what is IFRS, because this course is all about IFRS. So we'll get a brief understanding of what IFRS is and how the accounting standards have got certain nomenclatures, certain concepts about IFRS, some unique features about IFRS, so that it becomes easy for you to carry on your studies. So today we are going to understand very briefly what is IFRS. Then we also look at another reporting standard, USGAAP. Just a very brief understanding. Then how did IFRS develop? What are the bodies involved and how did this accounting standard develop? Then what are the salient features of IFRS? Then we look at the presentation of financial statements under IFRS and certain concepts, measurement principles, and so on that relate to IFRS. So first of all, what is IFRS? It is a single set of high quality, understandable, enforceable, globally accepted international financial reporting standards that is set by the body called as IASB, International Accounting Standards Board. So just like how you have accounting standards in India, in UK, and all major countries have their own accounting standards, that way another set of accounting standards which is accepted throughout the world is called International Financial Reporting Standards. Now, these standards have been developed to bring about consistency to accounting language. So we wanted to have a global language for accounting in the form of IFRS. Practices and statements to help the business and investors make educated financial analysis and decisions. IFRS was designed as a standard-based approach that could be used internationally. So can you just quickly tell me what was the need for us to have IFRS? We know that it is a single set of high quality enforceable accounting standards. So when every country had its own IFRS, what was the need for us to have an IFRS, or rather, why did IFRS come about? What are your thoughts?
There should be a unified set of standard which should be used internationally. For example, if those who have qualified for CA from India and coming to abroad working in international market, so we should have a unified standard.
Okay, so you mean to say that it is going to be easy for you as an accountant wherever you work if there's IFRS. Okay, rather than looking at us as professional brothers, whether it facilitates us, let us see from the perspective of the entity who's going to accept IFRS. What are the benefits that they would get?
Investments from global market.
Okay, so yes, can you elaborate on the global market?
If an investor is outside India, he wants to invest some money in the particular company in India. So the company is maintaining IFRS, means the investor can able to easily read the financial statement and can understand easily, so that he can able to invest more money in that particular company.
Yeah, otherwise he would have to employ someone who knows Indian accounting standards and then do a comparison of our accounting records with maybe a competitor who's located in some other country who is following that country's GAAP. So then you need two accountants who understand those two financial statements and then you do a comparison. But it would be far easier if both of them followed the same accounting principles. So one accountant will be able to make out the comparison of financial statements quite easily. So that's a fair point, and that was one of the reasons why IFRS was found to be a good alternative rather than going about with the local standards. I have two more responses here. One of them have said it's consistency. Yes, all companies of the world will be consistent in the accounting principles. So if there's consistency, what is the problem? What is the benefit of it? We have discussed consistency from the point of view of investments. So what is the other benefit of consistency other than making investments?
Comparison between the financials of two companies
Yes.
who are geographically located at different places.
Yeah. So when you do comparisons, then what happens? Why are we comparing? Other than from the investment perspective, why do we compare?
For investment purpose could be one of the major reasons, and
Yes.
to involve in other ways like supplier customer relationship or acquisition and mergers.
Okay, I got some more responses here to gauge the performance. So you want to find out how my company is performing vis-a-vis someone who's located in another country. So what is it that I can do to make my performance better? What are they doing better, or what are they doing not as good as me? So we can figure out our performances, because after all, we always want to get best results. We want to perform the best. So when you make a comparison, we will be able to do that very easily when there are consistent accounting standards. Also, someone has said uniformity while consolidating financial statements. Absolutely true, which even earlier person, I think Naitri Agarwal, told me the same thing, that you can do, it will help you in mergers and acquisitions. So consistency is a point. One more person told me, Ram Nilangekar, that there's fair comparison. Absolutely true. So all of this is very, very understandable and very good reasons why IFRS started to develop, because the major countries of the world had their own accounting standards, but there was no point of comparison, and people were not willing to say one accounting standard of a country was better than the other. So they thought maybe from the perspective of getting fairness and getting people to agree, if you have a separate set of accounting standards, then acceptance of all countries would be far easier. So that was the approach they went about, and IFRS came to be. Now, on the other hand, another major economy where they don't follow IFRS is the USGAAP. So here, in this case, the public companies of the US use the generally accepted accounting principles, or the GAAP. So the GAAP was developed by the FSAB, that is Financial Standards Accounting Board, and the Governance Standard. Now the SEC also said that it will not switch to IFRS, but it will continue to review a proposal to allow IFRS information to supplement US financial filings. So they said we are not going to allow a full-fledged conversion to IFRS, but we will have this IFRS as an additional supplementary financial statements that could be given by listed companies. So that is the stand of the US. That is why US has got its own US GAAP, and IFRS is followed by many other countries of the world, most countries of the world. So when I look at both of them, ISGAAP, US GAAP and IFRS, basically the basic point of difference is that the GAAP is a rule-based system. So there are some rules which you have to follow. You have no reason not to follow. That's the US GAAP. It's like if you have a traffic signal, you cannot break the signal. Just have to follow the traffic rules. Whereas in IFRS, it's a principle-based approach. So when it's a principle-based approach, it gives you a guidance on how you should follow the accounting standards. And because it's giving you a guidance, it gives you some bit of flexibility that if for a particular reason you're not able to follow the IFRS, then you can find out an alternative way. Like if it's not suiting your cost benefit analysis, then you can look at the conceptual framework and try to see whether you can fit another accounting policy which is consistent to your financials. So they give you this kind of flexibility when you follow IFRS, whereas that is not applicable in case of US. So now we are going to concentrate on international accounting standards. Now you might have come across accounting standards having the name of IAS maybe 1, and some things which are IFRS 1, 2, 3, and so on. Have you all seen such numbers when you have gone through the syllabus or gone through the accounting standards anywhere? Have you noticed that the numbers of the accounting standards are either IS 1, 2, 3, 4 or IFRS 1, 2, 3, 4, and so on? Yes or no?
Yes.
Okay, so now we are going to understand what is the nomenclatures that are put before the accounting standards, and why are we having IS 1 for some standards and IFRS for another standard? What is the reason? So this body called as International Accounting Standards Committee was founded in 1973. Right up to March 2001, this accounting standard body was setting accounting standards. And the accounting standards that were being set had the name of IAS, International Accounting Standard, and 1, 2, 3, 4. But in the year March 2001, when they restructured this committee, the IASB, that is International Accounting Standards Board, took over this committee, this standard setting process. And then accounting standards, when they started to come into the market, the new ones that came had the nomenclature of IFRS. So what they did was, from March 2001, what is the work of the International Accounting Standards Board? One is to set new standards in areas where there is no guidance. Second is, even if there was existing guidance under IAS 1 or IAS 2, IAS 3, and so on, if there was some guidance, they were reviewing all this guidance and putting it up in the format of the IFRS and giving a new IFRS number for it. Okay. And then the earlier IAS 1, IAS was removed out. So simultaneously on one topic, you will notice that we have an accounting standard with IAS or IFRS. You will not have on one topic both an IAS and an IFRS simultaneously, unless it is a transition phase where we are shifting from one accounting standard to the other. So at that time, for a few months, you may have common IAS and IFRS on a particular topic, but that is only for a limited period of time. So earlier accounting standards had the name IAS 1, IAS 1, 2, 3, 4, because it was set by the International Accounting Standards Committee. From March 2001, when this was taken over by IASB, the accounting standards started to get set by the new body. So the new body said, we will relook at the IAS, and if we want to change, we will put it into the format of the IFRS. So an IAS would become redundant and an IFRS would come into the picture. Also, this body said that new accounting standards that are going to be set from today on topics that are not there under IAS, we will put that with the nomenclature of IFRS. So that is why today you will notice that we have accounting standards 1, 2, 7, 8, 10, 12, 16, and so on, right up to 41. And we have IFRS right up to 70. So if I take IFRS 16 leases, earlier there was a IAS 17 leases, but that went redundant. So now we have an IFRS 16 leases. Like that, you will notice that topics don't get repeated. You will get a accounting standard exclusively only on one topic, either under IAS or under IFRS. All right. Now we are going to understand what is the need for us to know. Yes.
So, for example, if IFRS is not mentioning anything about the prior period adjustment or if any error has happened in the previous year, so we can just follow IAS 8 here?
Yes, there is. Absolutely. Absolutely. What I told you is that on any topic, you will have either an IAS or an IFRS. So in IFRS, I don't have change in accounting policies, prior period errors. Guidance is today there in IAS 8. So I follow IAS 8.
Okay.
Okay. So same way, employee benefits. Only IAS 19 is there. It is not under IFRS. So at one point of time, on one topic, you will have one standard which can have a nomenclature of either IAS or IFRS.
Okay.
That is what it is. Okay. So now we are going to discuss what are the salient features of IFRS. That means IFRS very strictly follows certain principles which might not be applicable to other standards which are practiced in other countries of the world. So what is it about IFRS that you need to know and you will have to follow when we practice, when we are going to apply it? Any examples which are in transition? Okay. Now there is an accounting standard on exploration. I think that is coming very just coming out, and that would be a transition standard as of now. Exploration IFRS 18. I think that is one example that I can give. Okay.
IFRS 17 will be a part of our this one, but 2022.
I don't know the date. I need to look at the date of transition. I'm sorry, because that has not been, it is not part of your exam syllabus, that much I know. But I need to look at the exact date of the transition. I don't have it with me directly. Okay. Yes, it is not in syllabus of diploma in IFRS. Insurance is not part of diploma in IFRS syllabus. Okay.
Ma'am, sorry, Vijay ma'am, just a question. If
Yeah.
this isn't part of the syllabus, but I would want to know more about it since I'm working with one of the leading insurance clients, and knowing more about it would really help me. How do I need to go about it? And if in case I have questions, can I reach back to you on this?
Actually, this syllabus is very much related to this. What I teach now is very related to what we are doing for the exam. So I go with the exam syllabus. Okay. So you would have to read it and maybe look at some videos on the YouTube.
But IFRS 17 is not. But IFRS 17 is not part of this diploma.
No, it is not part of it. Insurance is not part of it. Okay.
Thank you.
Okay. So now we are going to look at what are the salient features of IFRS which are strictly followed under IFRS. Maybe some other accounting principles don't follow that to that extent as IFRS does. So first of all, we have got more express guidance under IFRS as compared to certain other accounting framework may not have that much of guidance as we have under IFRS. Second is, there is a lot of focus on substance over form. We always talk about it. I think from the 11th standard, the very first topics that we were studied was substance over form. Okay. So at that time, we would have had a brief idea of things, but IFRS follows it very deeply. So I will show you one or two examples of how IFRS goes in depth into the concept of substance over form. Next is, IFRS extensively uses present values and fair values while accounting transactions. So we will discuss that. And then there are much more detailed disclosures provided under IFRS as compared to many other accounting frameworks. So these are some of the features of IFRS. So when I look at more express guidance under IFRS, if you look at the concept of a financial instrument, under IFRS, I got 3 accounting standards which are dealing only with financial instruments. And in that, there is one accounting standard of IFRS, that is IFRS 7, which is dealing purely with the disclosure of financial instruments. So such detailed guidance is available under IFRS, but not that much under other framework. Also, when you come to revenue, they have gone into so much in-depth analysis on various areas under revenue where there was a lot of wanting for information, and also there were a lot of loopholes on the existing standard because enough guidance was not there. But the existing standard has got so upgraded, which is taking care of various kind of anomalies which you may come across, and you may need to have more guidance. Also, when it comes to evaluation and exploration for mineral resources, there are accounting standards. We have accounting standard on fair value measurement. That is, how do you apply fair values? How do you decide fair values? How do you apply on it? So there is a lot of extensive guidance on accounting standards under IFRS.